To the investor call of Sanofi India Limited. My name is Radhika Shah and I am the Company Secretary and the Head of Legal for Sanofi India Limited. I have with me Mr. Rodolfo Ross, Managing Director, Mr. Rashid Ayari, the Whole-Time Director and CFO of Sanofi, and Himanshu, General Manager of Consumer Healthcare Business. Rodolfo, you are on mute everyone.
Good morning, everyone. Thank you for joining the call. I look forward to going over the results of the quarter and the calendar year review, as well as taking your questions. But before that, I'm thrilled to introduce Mr. Himanshu Bakshi, General Manager of Consumer Healthcare Business. Himanshu has joined Sanofi with effect from 15th of January 2024 to lead the consumer healthcare business and will transition to be appointed as the Managing Director for Sanofi Consumer Healthcare India Limited, post with the merger, subject of course to the applicable approvals. Over to you, Himanshu, for your brief introduction of yourself.
Good morning, everyone, and thank you, Rodolfo, for your warm words. Really delighted to be a part of this exciting business, fantastic company. I strongly believe India is at a pivotal point right now, and it's going to drive, growth and opportunities in the future. And the same goes for the consumer healthcare business. I think with the kind of potential that we have, the immense opportunity that India brings with it, we have great products, purpose-driven brands with great science, and there's no reason why, we won't be tapping this immense potential, in a big way. So really looking forward to this exciting journey, a journey of growth, a journey of potential, a journey of success.
Thank you, Himanshu. Rashid, would you like to greet everyone?
Good morning, everyone.
Thank you. Before we begin this investor call, two important announcements. First, please note that the proceedings of the meetings are being recorded. And second, our standard disclaimer that certain statements may be forward-looking. The actual results may be affected by many factors that may be different from what is being envisaged in terms of future performance and outlook. Moving on to the agenda of this call. In today's call, we will be talking about the performance of the company for the quarter and for the financial year 2023. Thereafter, the management will take questions from investors and participants. The Q&A will end at 12:30 p.m. sharp. All investors and participants are requested to keep their questions brief and avoid repetition. I now hand over the call to Rodolfo and Rashid to take us through the presentation.
All right, thank you, Radhika. So if we can move to the first page, we have prepared a brief presentation whereby I'm going to give you all a brief overall update on the status of the business and the progress versus our strategy. Following those initial slides, Rashid is going to come in and share with us some highlights on our financials for the quarter and for the calendar year. Right? So to begin with, if we can click to the next slide, please. The next one. Yeah, so I begin with this one, which is the slide which you are all familiar with. This is the summary of the plan that we unveiled by the end of 2022, which is the North Star for what we do in Sanofi India Limited since then. This is the India for India plan for Sanofi with its four pillars. As a reminder, four pillars are the focus on diabetes and consumer healthcare, focus also on end-to-end innovation, the last pillar, the go-to-market transformation are the key enablers for the success and future growth of the business in India. So if you click again, I have a few more updates on each one of these pillars that I want to share with you. On the first pillar, we have successfully moved to the one diabetes business unit, where we brought all the products that pertain to the category of anti-diabetes and under the same roof with the same group of people and same leadership, specialized in diabetes. And by doing that, we have been able to expand reach and strengthen the positioning of our brands within that portfolio. We have also deployed a disease awareness campaign, a diabetes awareness campaign, targeting the general public, bringing with the intention of bringing the important non-communicable disease awareness up in an attempt to increase also the number of people that have the condition and get the right treatment. That has been a successful first year of that campaign, where we have reached more than 200 million people, more than 200 million individuals who were hit by this campaign over the course of 2023. Lentils, as you know, we've seen that diabetes business unit faced an NLEM price reduction, which was largely mitigated by the rest of the portfolio, as you see in the financial figures when we talk about them. And we have begun to accelerate the volume of lentils following that price reduction. Local innovation on diabetes has advanced. Insutage, a localization of one of our insulins, is already well advanced with plans for its introduction soon. Cetapin, another extension of a local brand, that is another local extension of one of our brands, that is also planned for the end of Q1. And then as part of our global innovation program, Soliqua comes to market by the end of the Q1, beginning of Q2. So a business that has been already transformed with a significant pipeline added to it. On the consumer healthcare business, as you know, we wanted to be able to double down on Allegra, extend and deepen our consumer understanding and shape the OTC policy in the Indian market. To that end, we decided for the CET demerger, which is on track for Q2 execution, with the board already approved, as you know. Shareholders also approved by December 18th, as you know, and we're now following the other required approvals along the process, while the organization readiness for the separation is well advanced. We just got to know him and Chu, part of that readiness for the separation that I just mentioned. On the third pillar, end-to-end innovation, we have advanced with a local and global pipeline with 7 launches, which I'm going to be talking a little more about in the following slide, which also includes the localization of Insuman, one of our formerly imported insulins that is now being used in India. And we have continued to analyze the potential of partnerships for rich extension on our established products. On the fourth column, we have successfully gone through a reduction of overlaps and increased synergies and agility in the organization. And by looking at the resource allocation and thoroughly reviewing it, it resulted in a 36 crore OpEx savings in fiscal year 2023, coming from a reduction of 8 business units to 3 business units, the removal of 1 layer of management from the organization, and we did all that, as well as the deployment of the trade organization and the piloting of 4 digital go-to-market organizations that will run in 2023. So good advancement on all 4 pillars of India for India. If I go to the next slide, please, I'll show you a little more on innovation as I mentioned before. So back in October 23, we brought to market freezing suspension. Then in December 23, we brought to market Sanofi and Carmada. All the 3 of them are line extension of the existing brands in our portfolio today. Now for the diabetes portfolio, the activity and the innovation comes in this year with Soliqua, Insutage, and Cetapin hitting the market as per my mentioned before. And CET is well planned for the introduction of Allegra and by 2025. So you can see consistent progress on the 4 pillars of India for India, leading to improving results that I'm going to ask Rashid to mention and discuss with us next. Rashid, over to you.
Thank you, Rodolfo. Next slide, please. So a good performance for the quarter and the full year 2023. in the left side, so we have the quarter, and the right side, so we have the full year. Before starting explaining the result, I want to explain a bit the slide. So we tried to eliminate any NLEM price impact for launches in green. So we have a comparable data, and from profit before tax, we exclude the divestment of soframycin. So good result for the quarter again. So 525 crores versus 500 crores in 2022, 12.6 growth in published, and 10.6 in comparable when we exclude the NLEM price impact. In terms of profit before tax, so good trend as well, plus 5.6%, excluding the soframycin divestment. Going to the full year result, we have good results, in terms of sales. So 5.4% growth in comparable basis, and 1.2% in published. So in terms of export, which is not shown here, we have good result as well, plus 27%, which is showing a steady growth from one year to another. Double-digit growth for profit before tax, excluding the divestment. And this result is a mix between the different lines. So we want to better mix the development of soframycin. We have better prices for the IPI that were negotiated for 2023, in addition to one of accruals booked last year for the NLEM price to a certain level. And we have favorable foreign exchange rate for the export. As mentioned by Rodolfo, we have let's say a good trend for the OPEX or operating expenses with -6%, which showing that the India strategy is already reflected starting this year. If we can move to the next, please. Yeah, I think this slide, so as I know that we cannot talk about the future, but the actual number, it's a good indicator. So we have again a steady improvement from one quarter to another for the operating profit. So as we can see in terms of value and in absolute percentage as well. So for quarter one, moving from 28% to 32%, Q2 24% to 26%, Q3 27 to 31, and the last quarter 27 to 28%. Can we move to the next, please? So here we want to share a bit, the trend in CAGR from 2018 to 2023. We see in the left side the domestic sales for the retaining business, excluding the divestment, we are at CAGR of 5.9%. And in the right side, in the published, so we are at 3.6% CAGR. The most important part, I think, is in the left side regarding the profit before tax, where we see significant increase from one year to another, moving from 24% in 26%, and finally in 2023 we are at 31%, thanks to the strategy that was put in place since then. Regarding, I think the dividend part is an important one. So for this year, so we see the trend from 2018 to 2023 versus last year where we distribute the payout was 85%. This year the payout will be 65%, and this is explained mainly by the working capital, where we build a stock at the end of this year, a piling stock, just to avoid any impact for next year, which is related to the change in the address of our warehouse. So then it goes to license approval again and the blackout period. So to avoid any impact for the business, we distribute 65% within the cash available in the company. So that's it from my side. Thank you.
Thank you, Rodolfo and Rashid again for taking us through the presentation. Now we will move to the Q&A session. In this session, we will respond a reminder within the boundaries of our internal policies and SEBI regulations. We will restrict our responses to clarify on matters which are available only in the public domain, either through our annual reports, quarterly financial statements, and other disclosures. There are other granular aspects such as product-wise, state-wise, therapy-wise, sales margins, profitability, which we consider confidential, and we will not be able to comment on these topics. We also do not provide any earnings guidance, and hence we will not be able to respond to queries on future business, future product launches, or margins or profitability and CapEx. Moving on, as we had mentioned, we will be taking the questions in the sequence of the registration of the participants. If there are multiple registrations, we will take questions from the first participant and giving others the opportunity after the first question has been raised. In the interest of time, please, and to give equal opportunity to all, please keep the questions limited to one or two. Handing over to Chorus to allow the participants to ask questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question over the video presentation may click on the video question button on your screen. Please allow access to your microphone and camera and click on join. The operator will announce your name, after which you will be requested to unmute yourself. Participants who wish to ask a question via phone may please press star and 1 on your touchtone telephone. You are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Aditya. Please go ahead. Kindly unmute your line. Aditya? Give me a moment, please. Mr. Aditya, can you please unmute and go ahead with your question? Since there is no response, we'll take our next question from Rishikesh Patore. Please go ahead. Give me a moment, please. Mr. Patore? Mr. Rishikesh Patore? Can you please go ahead with your question?
Am I audible?
Yes, go ahead.
I just wanted a few clarifications on the progress of new launches and timelines for the same going on.
Okay, Rodolfo, you want to take that?
I'll take that. Thank you, Mr. Vishikash Patari, for the question. We have advanced quite a bit with our pipeline, right? So from the beginning of the deployment of India for India, as a plan in India, we have now gone to 7 projects that are lined up. I mentioned them before, so I'm not able to give you details in the figures from the launches, but I can tell, because those will be forward-looking statements. But I can tell you that they have been carefully selected to do one of two things. One, to leverage the strong equity of the existing brands that are already in the market. That is the case for the line extensions that I have mentioned before. And/or if it's a new launch, the new brand, then it enters into a large and untapped segment where we believe we have the right to win. And that is the case mainly with the launch of Soliqua, which is upcoming soon, and we believe can be a very significant impact. We can't speak about numbers for the limitations of this call, but we're very happy with the fact that we have been able to create a pipeline with 7 launches. Some of those launches that leverage the strong equity of existing brands, and some others that really tap into very large opportunities in the marketplace where we have the right to win.
Thank you, Rodolfo. We move to the next question. Chorus, please.
Yes. We have our next question from the line of Abdul Kader Puranwala from ICICI Securities. Please go ahead.
Yeah, hello. Am I audible?
Yes, Abdul. Go ahead.
Yeah, hi. Thank you for the opportunity. So a couple of questions. So starting with your comments on integrating the entire diabetes portfolio under one roof. So could you please elaborate as to... Sorry? Yeah, am I audible?
Yeah, we can't hear you. Please go ahead. Yes, you are.
Yeah. So my first question was pertaining to the comments on regrouping the diabetes portfolio under one roof. So, could you please specify as to what are the synergies, which you have prevailed by doing that in terms of, growth for your key brands, as well as right now, what would be the overall contribution of the diabetes brands to the overall top line of the company?
Yes. So just taking your first step. Thank you for the question again. So the importance of bringing diabetes under one roof is really to be able to synergize all the efforts that we make in that category of products. Before, we had products that were anti-diabetes products split into two different business units in the company, where we replicated many of the efforts in terms of management of the portfolio, strategy, direction given to the field, and also even the actual field representatives or reps in the field. We have very separated portfolios. So now we have them more integrated, and that is a benefit to the healthcare professional with whom we interact, because again, the healthcare professional sees the therapy as one therapy only, and by providing them a more unified representation on the side of Sanofi, we become more customer centric, we become more HCP centric, less focused on our own portfolio division and scaling, and more focused on what makes sense for the HCP or HCPs with whom we interact. So that has proven to be a successful realignment, allowing for us to become more customer-centric and also expand reach by not having two teams, more than two teams, in fact, going to the doctors with the portfolio. By having a reduced number of people connecting with each single doctor, we can get to more doctors. We can get to more HCPs, and that is beneficial to the business. So that's the first part. Second part is about, I think your question is the relevance of oral diabetes. Oral diabetes is a very relevant part of the portfolio. In India, this is still a very significant category with a large application. We have important brands in that portfolio. With Amaryl being clearly the strongest of the brands that we have in the portfolio. It is important to us that oral diabetes portfolio because it caters to doctors and to HCPs and patients that are in the journey of treatment before they get to insulin. So insulin being the ultimate gold standard treatment for diabetes, it is important to accompany the patient journey and the HCP journey all the way, from the moment of diagnosis, the beginning of oral diabetes, and then the migration to insulin. In fact, we are the largest company in India that does that integrates oral diabetes and insulin portfolio in the same company. So we think it is synergic from that perspective, so that we can follow the patient and HCP journey all the way.
Yes, I think that was just complete in terms of contribution on the sales. So the diabetes should be between 40 to 43%.
Understood, sir. And so a couple of follow-on questions as well. So for that, I mean, could you please help us understand how your consumer portfolio has performed in CY23 in terms of, the overall revenue growth, or some better comments on the margin side, would be a little helpful.
Should you want to take a stab at that one?
Okay. We've had a decent quarter when we look at Q4. Of course, there were some headwinds when it comes to the overall, category performance. But the good news is that all our categories, all our brands continue to gain share in the market. I think that's something which is in line with what we really want to do. Our key brands like Allegra continue to do very well in terms of market share gains. Brands like Delcoflex, Depura also are gaining significantly when it comes to the market. So overall performance in terms of the external, performance continues to be very strong and continues to be strong even in the month of January.
Okay.
Thank you, Mark.
Just a final one, if I may. So just one more question on the accounting side. So if you look at your working capital cycle, the inventory for the quarter, for the year has gone up significantly. So is there any RM inventory what you're specifically stocking, or what is the reason for this increase?
Yeah, so did you get the question?
Yes, clearly.
Okay.
Yeah. Thank you for the question. So as I mentioned in the previous slide, when I was talking about the payout regarding the dividend, that we are paying 65% for this year, which is impacted mainly by the inventory. Okay, so especially for 2024, so we are changing the address of the principal warehouse that we have, and once we ask for the approval, it's going to take a bit time for the approval of the license. So that's why we made a kind of stockpiling for end of 2023 to avoid any impact in the business for the next year. So this is the major explanation regarding the inventory that we built at the end of 2023.
Okay, so is it specific?
Mr. Puranwala?
Sorry.
Yeah, please go ahead.
Yeah, so is this specifically to some particular brands which you are importing, or is it a normal RM, blood stocking what you're doing?
It's related to the main. It's all the stock so we are piling here. So as we are changing the address, then the license needs to be updated there.
So it is largely the imported products, Abdul, and of course there are certain other imported RMs as well, but it's most of the imported finished goods.
Yeah, and we mainly Flexan, insulin, and Targocid, so to be more precise.
All right, got it. Thank you.
Thank you.
Thank you. We have our next question from Varun Bang from Bryanston Investments. Please go ahead.
Hello.
Yes, sir.
We can hear you.
My first question is on insulin. How is the prescription increasing in the smaller towns and rural areas for insulin, and what is our approach to tap that market?
Right. So thank you for the question. Insulin prescriptions are, when you look at our insulin prescriptions, right, the prescriptions of our products, they have increased significantly because of after NLEM implementation on lentils. We saw that many HCPs opted for lentils more than we were doing before. With the price reduction of lentils became even more of a brand of choice in terms of prescription for doctors as they initiate insulin for patients. So we saw a significant increase in our share of prescriptions since the implementation of NLEM for lentils. Prescriptions for insulin were together in the year 2023. These were slightly impacted by the loss of exclusivity of certain oral anti-diabetic products. So some oral anti-diabetic products went into loss of exclusivity, therefore reducing the price of those products, and therefore causing a certain further delay in the insulinization of patients in India. That is a one-off effect for the month that followed that loss of exclusivity. But in total, it had an impact in terms of number of insulin prescriptions that we saw in the market. In our estimate, that has impacted the overall market, even if for our brand, our share of prescriptions increased significantly, because at the same time that the whole pie was being impacted by that loss of exclusivity on oral anti-diabetes. We also had the price reduction on lentils due to an NLEM, which resulted in us gaining significant share in the lentils in the prescriptions of these.
Okay. And we have stated that we are looking for partnerships to expand our reach in Tier 2 and Tier 3 cities and also in the rural areas. What would you look for in any potential partner? And from long-term perspective, won't it make more sense to develop the reach organically? Can you share your thoughts?
Yes, we think the same way along the lines of what you're saying. But we think that the reach for the diabetes portfolio would expand organically. Insulin is the central part of that portfolio, and insulin is significantly less dependent on Tier 2 and Tier 3 cities, with lots of opportunities, of course, in Tier 2 and Tier 3 cities, but also lots of opportunities in Tier 1. But that lower dependency on Tier 2 and Tier 3 cities makes it more interesting and more attractive for organic reach expansion. So currently, the plan, as you see in India, isn't to pursue partnerships for the extension of reach of the diabetes portfolio, not at the moment. So your comment is in alignment with the way we think about it.
Okay, and when we talk about Sanofi in India for India, we have also talked about strengthening our local innovation capabilities. So can you share what kind of R&D capabilities do we currently have in India, and how do we look to build it further? And secondly, would the local innovation team be largely focusing on line extensions in general medicine segment? Can you share some information?
Well, yeah, I shared with you the pipeline, right? Our innovation pipeline. You can see there all the products that we are launching. There are some line extensions, but there are some completely new launches as well. Right? So the biggest example of that being, of course, Soliqua, which taps into an entirely new segment of business for us, coming up end of Q1, beginning of Q2. Right? Now, in terms of our infrastructure in R&D, we're very lucky to have one of the most sophisticated R&D centers of the Sanofi Group located in Goa, within our Goa site. That is a capability that we can and have leverage in the past and can continue to leverage. We also have a network of construct manufacturing organizations with whom we have already worked for a number of years, both for the domestic market and for the export market. So these CMOs are completely validated and vetted by the quality and supply chain organizations in our company. Then they can also be leveraged as resources for innovation in India. So I think that more than building more capability in R&D, Sanofi India. The challenge for us is really to leverage the capability that we already have. We have significant capability already installed, and the big challenge and the exercise for us is to make full leverage of those resources and those capabilities that we already have, which is what is happening as we build the pipeline and as we build the pipeline that I have shared with you before.
One last question. What is the share of exports in CY23? And in previous forums, we've talked about taking advantage of India's low cost advantage to grow export business. How do we look at expanding export business, and where does export business come in the list of priorities?
Yeah, I'll hand that over to Rashid, who's very close to the topic and passionate about the topic.
Yeah, thank you, Rodolfo. So the current export is around 18%, 18 to 20%, let's say. We are looking for a different geographic area where we can use manufacturing in India, as you mentioned clearly, thanks to the cost, the reduced cost, and the quality. As we see that in terms of quality, the CMOs or our Goa site are one of the highest ones. We are looking for export to Russia, to Central Asia, and we continue with the current market that we are supplying from Goa right now. So the volume that we are looking for is for sure will allow in the future to reduce cost as well, as long as the capacity are increasing in Goa side.
Thank you for answering my questions, and then that took you for more questions. Thank you.
Thank you. I now request Maulik V from BNK Securities to go ahead with his question. Mr. Maulik V from BNK Securities, kindly unmute and go ahead with your question.
Hi, all my questions have been answered. Thank you very much.
Thank you.
Thank you. We have our next question from Girish Bakru. Please go ahead.
Yeah, hi. Thanks for taking question. Just wanted to check on Toujeo. All glargine prescriptions, what is the split between Lantus and Toujeo right now?
Your question is split between the prescriptions of Lantus and Toujeo?
Yeah.
Okay. So let me just quickly check on that. They're getting to 92% and 8%.
And after this price reduction in Lantus, are you seeing an impact on Toujeo growth? What's the broad thought process here, how this brand is going to grow?
The brand has grown very fast. It's a second generation basal insulin, and we've seen that the market has appetite for second generation, both in basal and also in the premium segment. Right? So Lantus continues to grow on the wake of the NLEM price reduction, and Toujeo continues to grow on the wave of migration to second generation and more sophisticated basal insulin. So both have a very promising perspective, and in fact, both are performing well on their side, in their segment.
Thank you. And just, I know you don't want to give a guidance, but given this year had a lot of impact from the price reduction, next year, what is your broad sense how glargine market will play out for you?
I think that the next year we'll continue to see strong growth of Toujeo, as it has been the case in the many years, in the several years behind us. So we see the momentum continues into the future, given that trend to second generation basals that continues. And we believe that Lantus will benefit from this price reduction with continued volume increase. As the difference between Lantus and its competitors has now shrunk to close to zero, the strength of the brand will pull more market share for Lantus as we go forward. So we see positively and very promising for for both firms.
Possible to put a number here, yes?
No, we have none of the forward statements, but I can give you a direction. Directionally, but we're optimistic about those trends.
Right. For Q4, we can communicate Rajit growth or.
Sorry. For the next coming up, we can't commit any numbers. We will not be able to indicate any number, but like Rodolfo mentioned, we will be in a position to indicate the trend.
Clear. Thank you.
Sorry, you were saying Q4 you can comment? How was Q4 for growth of numbers?
Q4, we have very positive signals related to launches, and the growth for the, let's say, in volume, it's around 5%, which is showing good trend for the next year. So based on what we see. Without commenting the next year.
Sure, very helpful. Just last one on Soliqua. The combination of insulin and GLP-1, do we have any product in India, or is this the first one that will come? And broadly, with your experience of Soliqua in other markets, how do you see this benefit with the other combinations which we have in diabetes?
Soliqua is a unique product. There is no similar product in India, but it is a product that caters to a very specific segment of the market, which is the segment where HCP prescribe premix insulin to certain patients under certain conditions. And that segment of premix insulin in India is as big as the segment of basal insulin. We currently compete only in the basal insulin with launches in Toujeo. Soliqua comes into the premix segment, which is equivalent in size and with comparable growth rates. Now, it comes into that market with being a unique product with clear points of differentiation, right? So it is a product that offers patients and HCPs fewer pricks, fewer number of injections versus the existing products. A product that offers lower risk of hyperglycemia, and a product that offers patients an advantage in terms of weight management, while current products add some weight to patients in general. Our product has an effect of a slight reduction in weight. So with those superiority and superior benefits, we believe that Soliqua is poised to become a very successful player in the premix segment. Now, it is difficult to compare that and inappropriate to compare it with other markets because in GDH2, right?
Yes.
Because few markets in the world have a developed premix category like we do in India. Few other markets, like China also has a segment of that. Most markets globally don't have a developed premix category. The reason roots back to the diet or carb-loaded. It roots back to the delay in insulinization. We take longer to put patients in insulin, and then when we do, we end up putting them in. So there's different reasons why you can't compare that. You can't compare it to many markets and other markets in the world in general. But comparing Soliqua to the competitors with whom it will be playing in the market, it is very strong in this position.
And is there any IP on Soliqua in India?
What do you mean, IP?
Is there a patent on?
Soliqua is, I think Soliqua is exclusive. Yeah.
All right. Thank you, Alcid. Thank you so much.
The answer is no. I don't know.
No, there is no patent, but it is a global product.
Yeah. Thank you. Thank you so much.
Thank you. We'll take an audio question from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah. Good morning. I hope I'm audible.
You're not very clear, sir.
Yes.
Can you use your handset mode, please?
Yeah, I am on handset. Is this better? Can you hear me now?
No, we can't hear you.
The volume is very low.
Is this better? Any better?
Yes.
All right.
Go ahead.
So my first question is on the share of revenue which comes under NLEM after Lantus and Frisium, undergoing NLEM expansion last year. What is the total share of sales of in India which is under NLEM?
Yeah, it's around, let's say, 59%.
39. Is that what you're saying?
Yes, 39.
Okay, thank you. Second. Okay, all right. The reason I ask that is, do you feel that with the WPI being virtually nil going into the next calendar year, it might have some impact on the domestic sales growth, because it's a very substantial number which is under NLEM where you get WPI linked price increase?
Yeah, for next year the WPI is not significant, so there is no impact.
Okay. And is it possible to give the sales and profits for the consumer OTC business for the bygone year, which is CY23, financial year 23?
So that's we've not, we've not disclosed segmented results. So we'll not be able to give you separate numbers to CSC business.
Okay. And you also indicated that in gross margins there's an impact of favorable movements of the foreign currency. Can you enumerate the scale of this impact on gross margins?
It's related mainly to the export.
Yeah. What would have been the contribution financially of that?
We can disclose, Radhika, or?
No, Rajat, not very clear in terms of the question. Can you repeat?
So my question is, what is the impact of currency-related gains on your gross margins or on your operating margins for the bygone year?
No, so as mentioned by Rashid, the forex gains are largely for exports, and we don't indicate numbers in terms of the impact on gross margins.
All right. And is it possible to give some idea of, the contribution that you would have received from the launch of new products in December and I think September of this year? You've launched a few new products, right? Sanofi, Karmada.
Like I said, yes, Gagan, like I mentioned, we don't disclose product-wise sales, but the launches have been very recent, so it may not be significant until we test the prices.
All right.
So you launched mid of December, so it's not so significant. Fully agree.
Okay, but since not all of them, but I presume some of them are line extensions. Is it the case that growth in these would also, at the same time see some of the existing products sort of taper off because you will emphasize on the line extensions?
No, not really. I don't think so. Go ahead, Sanjay.
No, just to repeat the question, I'm sure I captured it.
No, his question was, since some of them are line extensions, the one launched in December, I think Sanofi and Karmada, will they have any cannibalizing effect on our existing products to which we...
I think it's a good question, but we carefully select line extensions to tap into segments where we see growth potential and where we're not going to. Line extensions is not just a very similar version of something that we already have, but they are typically the ones that they're bringing to market. They extend the brand into segments where we are not present, therefore minimizing any cannibalization potential.
Right. And the last one, if I may, from my side is, you indicated loss of exclusivity for some products in the diabetes franchise impacting Lantus growth. I presume it would have also have impacted your Amaryl franchise growth. Any assessment you can give us of the impact on Amaryl from LOE on dapagliflozin or gliptins?
again, we don't comment on brand performance, right? But I can tell you that Amadeus is very strong, very solid performance, and not shaking.
Right. And Insuman with local manufacturing, is it local manufacturing now that you're doing in Insuman? And if that is so, do you see that helping your cost competence and therefore growth in the market?
Can you repeat the question? I got a little noise in the background.
My question is on Insuman. Have I understood it correctly that Insuman is now localized for you?
Yeah, we're localizing Insuman.
Yeah. So in that case, does it make you far more cost competitive, and therefore, does it help your cause and growth of Insuman going here on?
Potentially, it would help. It potentially could be positive impact. Yeah.
Okay. Yeah. Thanks. I'll get back in the queue. Thanks for taking my questions.
Thank you. We have a next audio question from Prerit Chaudhary from Green Portfolio. Please go ahead.
Hello, sir. Am I audible?
Yes, please go ahead.
Yeah, I want just one question. So currently, our exports are at around 18 to 20% of our total top line. So I just wanted to understand how much percentage from our Goa manufacturing plant currently goes to exports.
Sorry, if I understood your question correctly, you want to know the percentage of manufacturing in Goa.
Yeah, how much of that goes for exports?
Yeah. From Goa, we are exporting around 30%.
Can you also provide for the previous year the same number? How much would that be?
Sorry, it's not clear.
So we will get back to you on that. We don't have the number.
Can you repeat again?
The number of the export for the previous year, the comparable number for previous year.
Yeah, it's similar.
Similar.
Yeah.
Okay, similar. Okay, that's it for me. Thank you.
Okay, I think, Chorus, since we're already nearing time, that could probably be the last question. Please feel free to write in if you have any other further questions. And thank you very much to all the participants for attending to the call and patiently listening. Rodolfo, you just want to give concluding remarks?
Yeah, thank you, Radhika. Thank you very much for joining the call, for your questions, and for the opportunity to clarify a few more elements of our business as we move forward. Look forward to getting together again in the next quarter.
Thank you, sir.
Thank you, Boris.
My pleasure. Ladies and gentlemen, we now conclude this session. You may now disconnect your lines. Thank you once again for joining.
Are we done, Chorus?
Yes, ma'am.
Thank you.
Thank you.
Thank you, Rashid.
Okay, thank you, guys. All the best.
Goodbye.